Hey Shay.
Take one for me.
Shay in the building.
Down that way.
Hello, hello, hello.
One for me. That way. One for me. Pass it down. All right. Ms. Davis, whenever you let me know, I can start. I will start.
It is. Hold on, let me get my people right. So there's some people that's on the Zoom as well. You can talk through that camera; they can see you.
Okay.
Hold on, just
Technology.
yeah, I'm gonna get just. All right, you good to go.
Well, good afternoon, everyone. Ms. Davis, everyone here. My name is Jose Oxen. I'm with Prosperity Bank. My colleague Anna Alvarez coordinated this meeting for us. I appreciate you all letting us come by and say hello, introduce ourselves. We've been working together indirectly. If I notice, I think I saw we're also members of the HBRA.
Yeah, Houston Black Real Estate.
And I think
that's how I found out about you.
Okay, thank you.
Yeah.
I know I recognize you there.
Yeah, that's
So
how I
proud
found out
members
about
of them
you.
as well. I
Yeah.
understand the gala's coming up, so that'll be some
Yep,
exciting
Galen's coming up.
times.
That's right.
But thank you for letting us come by and introduce a little bit more in depth of what we are, who we are, and what we can offer your clients, friends, family. So we're a commercial bank with a community bank inside, essentially. Today, many of the products I'll just present to you on behalf of Anna is going to be our consumer real estate products. So to kind of start off, I'll just kind of dive into, you should have one that's the doctor program. I believe you have that one, do you, in your hands, the doctor home loan program?
Yes.
Yes. So just some highlights of that program. Finances up to, for the primary home purchase, up to $750,000 with no down payment and no private mortgage insurance. Okay. Some highlights as far as underwriting that you'd like to have for your clients. Minimum credit score is 700. Okay. Front end ratios are at 35%. Back end ratios are at 43%. Okay. Some things to consider. Not having any past dues within the last 12 months, no bankruptcies, or the last 60 months, no derogatory housing payment items, okay, whether that's mortgage or rent, okay, in the last 24 months. The physicians that are eligible, DOs, MDs, DPMs, DDS, DMD, and DVM, okay? And don't test me on what all those acronyms are, all right? Let's just say they have some good education behind them, right? And to give you an idea, I want to give you at least an idea of what that rate is today for our discussion here. So you can have an idea of where our doctor program is currently today. I apologize, we did a little bit revamping to this. I want to make sure I give you the right one. That's not that one. That's not that one. And where is my doctors? I see my doctors in here today as part of the revamp we have. And I apologize here for that. Oh yeah, I was looking at it. So just to give you an idea, we have a 30-year fixed jumbo program for them today. Rate today at the 100% mark, 3.125. Okay, and that's up to the 750 jumbo rate. If you looked at, for example, let's do a 10-1 arm. Again, I'm going to give you this one up to 548, so just under the jumbo, 100%, 2.75 interest rate as of today. So just to give you an idea of what the rates are for that program. Okay. The next one I wanted to introduce you to, Bob, is the one that says home finance. Kind of cover that one for you. Going to kind of cover some of the highlights on our programs. So We do have a secondary market, and that's the one that says home financing. Yeah, that one. Little house. Portfolio and secondary market we have. I'm primarily going to touch on the portfolio. So we have 5-year, 7-year, or 10-1 ARMs. Okay, 30-year amortization, 11% down, no PMI. Okay. Minimum credit scores for those products right now are at 640. Okay. Front end, debt to income ratio is 35%. Back end up to 43%. Same highlights as before. No past due items.
Let me ask you to do this for me.
Sure.
All right, because we have some newer agents that are
Oh,
here.
okay.
So some of the terminology that you're using,
Got it.
they may not know what that means.
Thank you for highlighting that.
Absolutely.
So at any point, please ask questions. Okay. If I don't know the answer, I'm going to follow it up with you. Okay. I know we'll follow up with you. So please, absolutely stop.
So back end ratio, front end ratio, you might want to expound a little bit.
So when we're looking, thank you, Mr. Davis. When we're looking at the housing payment, okay, one of the first things your client's going to be looking at, or they're talking to us about, right? What that number is. So that front end is going to be their housing payment. Principal and interest, taxes and insurance, or escrow. Okay, that's important. For us on the front end, in that category or that amount, 35% based on their gross monthly income. Okay, when we're looking at the second part or the back end, it's inclusive of that housing payment, including taxes and insurance. Not forget, HOAs, it's important. A lot of us living outside of Houston can't forget about HOAs. All right, it sneaks up on us, but it's an obligation for that house, including everything. We're going to calculate on the back end that housing expense or that loan payment, tax and insurance, HOA, plus whatever other items they have on credit, car notes, student loans, okay, just to name a few. Again, only credit items. Okay, so questions on that part of it. Okay.
So why does the bank look at both the front end and the back?
So, you know, from a bank's perspective, it's not just about the price, it's sustainability, right? Staying in that home, affordability. Okay. So, you know, today, well, we're hoping that not just through Prosperity, but all of our peer banks, lenders are making home ownership a reality for our local communities, right? But it's important to understand what is that income that's available. Gross is not net, right?
Mm-hmm.
So that's important when we're talking to our clients because we're not counselors, okay? But we're still answering questions and highlighting, okay? And I always like to do this with clients. My numbers say this. My paper says this. You can qualify up to this amount. But Mr. Customer, Ms. Customer, what do you feel about that? You know, because you want to be able to sleep at night with that payment. You know, if you're comfortable with whatever you're paying now and then some, well, right, and then we're close to that or maybe under, even better, right? They're going to be very comfortable. But what if we're higher than they are right now? They love the house. But that number, wow, am I going to sleep well at night? Okay, so another term I like to present to clients or kind of a view is love the number first, not the house, right? How hard is it for both of us when we have clients that we fall in love with this house, but now on the financing, we can't get there. It's hard as the client, but it's also hard for us too, right? We've invested time into that situation. We've been with that client, you know, from beginning to end, now we can get there. So to Mr. Davis's point is understanding both parts from a lender's perspective is not just the housing payment, it's what other obligations in addition to that housing payment that you have on credit already, because those are obligations. I was telling somebody in the elevator, it's summer's here. I'm here sweating a little bit. It's hot out there. I think we all, or may hopefully not, but we've had situations where you have a client, we're in Houston, 2 months into the house, AC breaks down.
Mm.
Maybe they don't have insurance for the house that protects them for that, right? Because that's an additional cost.
Mm-hmm.
You don't want to have a client in the situation where, what am I going to choose? AC repair or that mortgage payment that's due 2 weeks from now,
Mm-hmm.
right? So it's understanding both sides of that. I hope I'm answering the question in that way. One of the things that we're very proud of at Prosperity is we partner locally with many of the HUD-approved counseling agencies. For example, HBRE has the classes they do for homeowners, first-time homeowners. We're part of that. Avenue CDC, Chinese Community Center. So most of them here locally in Houston, we're a part of or have partnered with. So we highly, highly encourage, especially first-time home buyers, but even if they're second or third home, to attend one of these classes because they're going to go more in depth. And in some cases, they may need some counseling that they can get through these services, which is important. When they get to you, when they get to us, it's a little bit more specific, right? We're trying to get them approved on the numbers. You need to know what is that number, right? So you can find that house. So hopefully that kind of helps a little bit the importance of understanding both sides of those payments.
Mhm.
And that's important. When you send the clients to Anna, that's who your primary contact is going to be. She's going to tell that client, you know what, maybe they had already come with another option and they're kind of seeing what we can do. She's going to tell them, you know what, Mr. and Mrs. Customer, you got a good situation. You need to go ahead and go with that. Or this is how we're different. It may be better or worse, but this is how we're different. Or this is why this is better for you. Look at this rate. Look at this payment. Okay, yes, you're getting this closing cost, but look at the rate they're giving you because of that. So we'll be that second option or review, if you will, to validate. At the same time, sometimes it means you got a good deal where you're at. Go with what you have. Think of us the next time if something comes up, okay? I'd rather lose this opportunity, but know you had a better situation. That's why you went with them. But think of us for the next time, right? So that's hopefully that's something that you can kind of hold on to as you're visiting with your clients. So again, back to this program, as far as home financing in general, we're gonna have a little bit of everything, all right? The reason we have two areas to the bank is we wanna hopefully be the one place your client has to go to. If we don't have that option, that's gonna be very, very a specialized situation that we don't have it, okay? So we're gonna have for somebody that's looking for a short-term transaction, 15 years or less, if you will. You're gonna have the 30-year amortization. We're gonna have an option for veterans. We're gonna have an option for first-time home buyers, okay? So at the very least, you're gonna have a good place to see, well, let's see what Prosperity has, all right? Let's see
Y'all
what they
finance
have,
land?
right? I'm sorry?
Y'all finance land?
We finance land, absolutely. One of the few lenders, I
Yeah.
think, traditional lenders that finance land,
Yeah, I
both
know that.
on the consumer side and the commercial side.
Wow,
I've
that's-
done quite a bit of ranches here in Houston. We're not too far. We're not too far from the sea. We're not too far from agricultural. So we even do airplanes. Okay, so we do a little bit of everything. Okay, it just depends on our markets. And that's the great thing about us too. You may be in a market where, okay, maybe you're out in Hempstead or Water. You know what? We'll reach out to one of my lenders in Water or Hempstead. They got some expertise in that area.
Mhm.
Different markets, Galveston, for example. And got some lenders over there. So depending on the markets, we'll find the expert for you. Consumer real estate, like to have Anna as your primary contact, your go-to for this office here.
Mhm.
We'd like to have centralized. We'd like to let Mr. Davis know how it's going and get some feedback from Mr. Davis on how we're doing.
Mhm.
Okay, because we want to be that partner. So back to the options again. Fix. You got 5-year terms, amortized over 30, 7-year rates that are fixed, amortized over 30, 10-year fixed rate, amortized over 30. So again, what's the best option for your client? We're going to walk through that with you. Okay. I will ask you this. I think some of the things that helps us, and I'll have to defer to Mr. Davis on it. However your approach is with your clients, okay, we want to respect that relationship you have in how you are presenting options to them. You know, we have some partners that we are with them every single step of the way. So we need to explain every single step to them also. We respect that, okay? But we also have the doors open for the customer because they're the ones signing every financial document. So we have to make sure that if they have any questions, they know that they at any time can ask us, right? Now they may say directly with Mr. Davis, okay, now this is what they tell me. What did they tell you? That's okay too, right? But we encourage them to have that dialogue with us. What we don't ever want, and knock on wood, I don't think we've had this. Someone goes to closing and they have no idea what they're signing.
Mm.
It's like the first time they're seeing these numbers, or they never told me this, or I never knew of that. I didn't know I have to have my taxes and insurance in this payment here every month. No, you know, we're pretty thorough. And again, the door's always open for questions for your client and for yourself. So what I was getting at is, let us know how you like to communicate with us, with Anna. Maybe there's a specialized situation or circumstance with that particular client. Let us know that too. Okay. Anna, you want to text? If you want to text her, she'll text. You want to email, you want to phone, whatever it is. It's been a very busy year, as you can see, probably out there in the market, even with COVID. Inventory, as you can see, challenge, right? Price ranges, challenge, right? But we're all been busy, all right? So volume is higher. Time frame that you can expect on transactions is going to vary right now. You know, on a typical, we prioritize purchases, okay? Because those are very time sensitive, right? You got a contract, we got to move, we got to go as fast as we can. That's our priority. Everything else comes after that. Things you can present to your clients as far as expectations from us. They will be working with Anna as their mortgage loan originator, mortgage loan officer, okay? That's their primary contact from the beginning of the application to the closing. After closing, they will have an assigned servicing loan officer. It may be me, it may be someone else within our market. We have 60 offices in Houston. For Mr. Davis, we'd like to have it centralized. And again, just to give you all that ease of communication of, okay, there's 30 mortgage loan officers in Prosperity Bank Houston. I can just go through Anna. Remember, Jose is the second contact. Let us do that search. I'm a consumer as well too, and when my time to call or to shop with different companies I'm at, it's frustrating when you have to go 30 different places to find the person that was going to help.
Right.
All right, so we're trying to centralize that for you. I'll come back to that a little bit more. Questions up to this point on some of the options that we have here. Again, purchase or refinance are options that we have for these amortizations. I'd like to go to a different product unless you have something right now that you'd like me.
So the permanent to close, I mean, the one-time close,
me
that's
go to
for a person that's gonna live in the house?
Excellent question. If you go to on that flyer, I should have one for you that's a one-time close. Do I for you?
Say home financing on the front?
One
Yeah,
more.
that
Let me
one
just
right
have one more. There was the third
This
one.
one.
Yes. This one here.
Oh, yeah.
This one right here. You should have this one here. One time close. Thank you.
Oh,
Mr.
there we
Davis'
go.
question. All right, it is for consumer purposes, so your primary residence. So one of the nice things we offer you, cost savings to your client, one transaction for the construction funds and the permanent financing. The great thing too, during the construction phase, their interest rate is locked in as their permanent rate. No surprises. We are only charging interest on the amount that's advanced throughout the process.
Does it change for if the home becomes a homestead?
It has to be their homestead. Has to be, well, okay, I see what you're saying. Initially, because they're moving, for example.
Yeah.
No, as long as it's for their primary residence, that's the
long
purpose
as they
of that
move
home
into
being
it.
built.
Okay.
It has to be that's where they're gonna live as their primary
Okay.
residence.
Are
Yeah.
there
But you were
two-
asking about the interest rate, I think, right?
Well, yeah, because I was just curious, does it change? You can have a primary residence. I don't know legally, so it's required.
No. Well,
You said once they've been in it for so long and then they decide to rent it out or they try to move out after 5 years or so, what happens then? Is that what you're asking?
Well, for example, my family owns property but my parents' main estate is over here, but there's like 3 of them over there on the other side of the highway. So like, what I'm saying is like, if my parent, yeah, if the house, if it's a homestead at that time, but then you move, you know what I'm saying? Because you can switch up. That's what I'm saying. So I'm wondering, like, does the interest rate change?
it's a very good question. It does not, because for our purposes of that loan, the purpose is that's where they're going to be their primary residence. So that's what they're acknowledging. That's where all the paperwork is saying up to closing. What happens after?
Okay,
Well, what happens after, again, payments are being made,
yeah,
just understanding for the client, and we would highlight if that comes up in the conversation, okay? Everything is based on that this is your primary residence. So keep that in mind. Anything you're doing here forward, this was done as your primary
Yeah.
residence. So we're not attorneys, we're not tax advisors, so we have to refer you or to a real estate professional that may be able to find you a resource to help you with that question that may come up. But as far as interest rate, it's not going to change because for us, the purpose is primary residence, where you go. Yeah, so there would be no deviation for that.
Jose, Where could a person go to find out maybe like what the cost would be for it?
Well, that's a good question. Very good question. So
Yeah.
For this one-time close
Oh,
product?
that's a very good question. You know, you have land. Well, where do I start?
Can we get another set for?
And I'm out of my flyers here. I apologize, but I will email this to everyone as well. I will have this email to you as well.
Me and Margaret will share.
Uh,
Sharing is king.
Yeah.
we've adopted, we can't refer you to any particular builder or contractor. Unfortunately, times have changed. You know, years ago, you know, you could be confident you're referring, it's strictly just a referral, right? Someone we know, acquaintance, someone we've met in an organization. Okay, there's no formal connection. Where we would like to, and Mr. Davis, correct me if this would not be appropriate, with your firm, we would like to say with your client, you know, we were talking about purchase, but they found out we did one-time close. Oh, I have some land. You know what? Maybe that's what I should do. If you know anybody, you know what? The contact with Mr. Davis's office is probably a great place to see if they have any contacts. Okay, but we work with many of the local builders. You know, what we will highlight for them is just some of the things to consider. Experience. You know, if someone's asking you to pay something up front before doing anything, just to talk to you, red flag. Right. Someone that I had this happen with one of my clients. Somebody's handwriting everything to you for you.
Oh, wow.
The estimate on paper and pencil, paper. Well, I know them. It's family, friend. You know, sound familiar? My uncle does this on the side. You know, this is your home. That's a big investment. So just consider some of these things. But we would refer them back to your office more than anything for some context.
Absolutely.
So
For
just,
the builder, as it relates
for
to the
builders,
builder.
correct. And again, to get an idea of estimates. Now, we'll tell you this, that transitions to another situation that we really love to highlight when it comes to our one-time close. It's very important from our side, when we have a client that's ready to look at a construction transaction, they need to have, at minimum, identified their contractor or a contractor, may not be the one they finalized with, but they felt the 2 or 3 they've talked to, this is who we're thinking we're going to do. A preliminary contract, so that means they've walked through the process and they have an idea of what those costs are going to be, with a schedule broken down of what those items are going to be for the construction itself. Okay, it's hard to probably get that without also having some preliminary designs of the home that's going to be built. So a lot of that, as far as that comes in this, probably I'm going to have to spend some funds to get ready to apply for a construction financing transaction, because the lender, Prosperity, we need to know what's being built and by whom. Okay, and many contractors don't want to release certain information if they haven't been compensated, and I can't blame them for that, right? They put in the service, they provided the service for a client. Well, they need to get compensated for that. There are exceptions. Some understand it, and it's up to the client, the borrower, to be upfront with that contractor too. Look, I am a client that's going to finance this. I'm not a cash transaction. I will need a bank loan for this. Some contractors right off the bat said, no, I don't do any financing. I do all cash. Okay, well, move on. Right, that's not going to be an option for your customer. But the ones that are, they're familiar with that. But we need that, okay? Because our approval will work based on that information. If we don't have the contract, if we don't have the design, we can't get you to an approval. We can't get the client. Any questions on that?
Yeah, Jose, I think maybe I asked the question the wrong way. So not necessarily what the cost would be for the building and the preliminary. I'm talking about like the origination fee,
okay.
The points.
My apologies, David. Got it. So Anna's really good. Typically, and I'm going to speak out of term a little bit here, but typically our loan estimates are generated when we have a complete application, which includes a property address. Typically, Anna's group in the mortgage area, they've worked on some things recently to at least give you some generalities with that. Okay, so, and that's important. Okay, again, I go back to, if your client's already looked at one of that option, share it with us. We'll put apples to apples. Here's the differences. Okay, but we can absolutely get you an estimated number if it's not the loan estimate itself. Again, for construction, you'll have a property address before we can look at it, right?
Right.
So there's really no reason you won't be getting that if you have what it's going to cost you, right? So we know that. But we'll give you that loan estimate. I just corrected myself because we'll have a complete application. So we'll have that. Again, you have to get that within 3 business days of when you apply, your client applies.
Okay. So it's
One-
case by case. So it's not necessarily like a schedule of fees anywhere
No, well, it really will be from the loan
from the
estimate.
loan estimate.
What are some, I guess maybe the consistent fees, I guess, if you will, what
Yeah.
they're going to be, these are all going to be consistent. So you will have an
Yeah.
origination fee.
Yeah,
Let me
yeah.
give you an idea what that origination fee, because that is going to be based on the amount. So right now, if we are 250,000 or less, our origination fee right now is $550.
Okay.
Okay, if it's 250,000 or more, 1,115. Okay, so that's to give you an idea. As far as fine and other fees, you're going to have your appraisal, and that's going to be consistent. You're going to now also have, if it is over 500,000, we also now work with a software called Built. Okay, Built essentially is a centralized system that we now utilize for our construction advances. Okay, I believe, and this is where an estimated for you, but I believe it's about $500. I think that's the amount we've set on that. Okay, but that's for that processing. It's a one-time fee. And again, they'll get that disclosed in that loan estimate at application. There's not going to be any surprises on that. Your credit report fees are going to be there, and that's this is now on any transaction. Credit report, your appraisal, recording fees. That's the other nice thing with us. On the construction, I don't believe we have a processing fee. That's one that may or may not be on a transaction. So we're pretty simple when it comes to the type or category of fees.
Gotcha.
Okay. Again, your client chooses their title company, right? Title companies are really fees are not going to change much. Okay. As far as the policies itself, state regulated, right? So that's going to be consistent. It's just their fees that they charge is going to be the difference. Please, not to say anything bad about anybody, but part of what delayed me today with my files, and I'm going to say honest the same way. We don't go to closing if the title company doesn't, I like to say, has the all clear. I literally say that. Do you have the all clear? If you don't have the all clear, please, title company, don't put us in a stressful situation to try and hurry up to a closing. We automatically do that because we put priority on any client, every client, to get there as soon as possible, right? There's no reason for us to delay anything. But like today, we're working with a title company. They never answered that question. This is commercial, but they're still making changes on the day of closing. That's very tough to deliver service to a client when we're put in that situation. So we're very respectful to all parties, including our title company. But I bring that up because there are certain title companies you like to work with. We just request to have good lines of communication. We've been doing these multiple options long enough. I like to think we're familiar with most of the title companies in the general Houston area and them of us. Some things I hear a lot from them is our loan docs, well, I guess, yeah, I still say that, are fairly small, relative to most mortgage transaction loan documents. So again, we try to be respectful in that process, but long way around the answer to get back to Mr. Davis' question, you'll have those fees in the loan estimate. And as anything else, like I said, if your client or yourself have any questions on that, don't hesitate to ask us. Okay. The great thing is the top part of that loan estimate, that can't change unless something totally changed with the application. But other than that, those top numbers are things section A, if you will, that box, those are hard. There isn't going to be any deviation, no surprise. The bottom parts are subject to change up to close. Any questions in regards to the fees, the loan estimate? Anybody? Okay. I'd like to give you on the one-time close for you. Let me get to that one for you to so you have a flavor of where we're at on that product.
You do investments?
We do. Single family residential. Absolutely.
Multiple family?
we would look at that. Yes. So I'm gonna come back to that. Don't forget about that. Just to give you an idea, and it was just about 18 months ago, maybe 2 years ago, that we introduced our own portfolio, 30-year fixed, one-time close product. We only offered that as a secondary market option. Now it's our very own portfolio product, 30-year fixed, one-time close product. And forgive me, even with glasses, I need some new ones. If we finance no more than 80% of the cost of the transaction, we are today at 3.50 interest rate. Okay, and we can go as high as 85% loan to cost or loan to value, the lesser, at 3.75%. And if Mr. Davis, if it's okay, dive a little bit deeper into that loan to cost, loan to value.
Yeah.
Something to introduce to you for your clients. They may have land already they own. Okay. If they've owned that land at least, I think right now we're at 2 years, at least 2 years, they can use the value of that land as equity contribution to that loan to value, loan to cost. This is for construction.
It's on construction.
Construction. Yeah, so they have the land, they want to build their home on it.
It's for investment. Oh, this for.
Okay. This right now, this is where they're going to live as their primary residence. So they can use that towards that 15%, 20% that they have to inject, right? Because we're only going to do 80 or no more than 85%. Okay. What we've seen a lot of, maybe they purchased that land 5 years ago. They still own on it. Well, that's okay. We're going to use, still same situation. They can use the value, but we're also going to give them credit for what they have paid down on that principal. So they've been putting money into that project technically, right? So we're looking at the overall cost value of the land plus the cost of the home construction to establish that total. And that's what we're basing that 85%, 80%. What's going to be key is how many years they have owned that land, if that's the case. We also have had situations where they're buying the land and the construction at the same time, need the financing for the construction. Those are a little tougher because at least I haven't seen any that I can recall recently. Again, you have to have the designs, who's going to build it, right? And you're buying the land at the same time. So, you know, is it, again, not as common. You'll have a seller that's willing to let the buyer have the time they need to find all of that information. Okay. We have financed builders, your Pulte's, your KBs, folks like that. Again, not always as competitive because again, we have to refer them back to, okay, let's look at your loan estimate. This is what they're giving you. This is what we can do. But with organizations, those builders like that, I always highlight the appraisal piece. You know, look at your contract. What does your contract say when it comes to an appraisal? In other words, appraisal came through, you decided you wanted to go with us. KB's contract said, though, we are not going to change anything on the price, regardless of what an appraisal comes back to be, right? Because they don't choose the appraiser. We choose from a list, but even as a lender, we're not, this guy's doing that company's doing this. So it's subject to what that comes out to be, but if it comes out less than the price, well, now there's a situation, right? What are we going to do? Again, going back to that contract, they may not deviate at all. So you may have a client where it appraised at 300, the contract was for 325. We can only go based on the 300. So now you got 25,000. What are we going to do? Are they going to lower it or not? So that's why on the front end, it's important that we look at that situation, or I'm presenting it here. If you have a client, because we have been able to finance some of those, taking it away, if you will, from their inside lender or their preferred lender that company is with. So I bring that in because that's where they may be buying the land, the house all together. Not quite the same, but it is still new construction. Okay. Questions on the one-time close construction? And I wanted to make sure we also can do that as a second home. Okay. We also offer this product, a little different pricing. We also offer this product as a second home. We also can look at second home financing in general, purchase or refinance. And that's something else that's made us a little different from some of our peers or some opportunities. So I'd like for you to kind of think about that a little bit. Any questions on any of those items so far? Construction, okay. Condos, we also finance condos, condominiums. We also do that as rental. I'll touch a little bit on the rental right now. So when it comes to investment properties, single family residential, experience is important, okay? Again, Houston, what I love about us as a city is we get out there and we do what we got to do day in, day out. We don't sit around, right? That's what I love everything that's been happening. It hurts to see nationwide. Then I look at us here in Houston and look at us. We're all out here. We're working. So experience is important on those investment properties because we still get clients at times. Well, my cousin does it and he made it look really easy. So I think I can do it too. It's a business. It's a business. One of the first questions we're going to ask is, tell me the experience behind this. Who's going to manage this property? That's important. Who's going to manage? Well, I'm going to do it. Okay. Tell me your background in managing properties, home, residential, even though it's a house. Who's going to take care if something happens at 2 o'clock in the morning with the AC here in Houston when the family has babies in there and they can't be without the AC? Well, I don't know. Well, okay, some things to think about. So experience is going to be very important. Typically, we're going to finance on a traditional single-family residential home no more than 80% of the price of the property or the value. That could be cash out too. We do cash out many times on that.
This for investment?
For investment. Okay. Preferably, we like to be at a 75% loan to cost or value. Okay, so that 25% down, preferably 25. Age of the property is important. When it comes to investments too, the condition. I highlight appraisals. If the appraisal says it's just cosmetic, if you will, then it should be fine. But if it starts getting into structural or habitable, you gotta be prepared for that. Well, I can fix it. We're going by the appraisal. Okay, so if it highlights, if he or she puts in there your foundation is whatever, bad, it has to be addressed. So you gotta be prepared for that. Okay. Leads me back to something important, I think that we've all talked about, but I definitely know it comes up in those homebuyer classes, inspections. Highlighting the clients the importance of inspections, okay, on their own, at their own cost, okay. That's where, and I'll introduce a product to you where we'll talk a little bit more about that, but encouraging them, don't know you have contacts, that they have that inspection done right away, right, when that contract is taking place. So there's no surprises. It didn't take the appraisal to let them know something was wrong with the foundation. That inspector highlighted that, assuming it was something that was able to be seen quickly. Multifamily, you were asking, we can look at those transactions. It's all going to go back to the experience and the financial strength from that applicant and looking at that situation. But we will look at it. We're very much looking again to support our local communities. And if that's an avenue that can support in that area, we're going to look to see what we can do. Has to make the numbers look good. Experience, creditworthiness, just like any other application. Definitely, we have some options. Any questions on any of this so far? We're still good?
Good.
All right. I'm going to dive into a little bit of what I am primarily involved in, where Mr. Davis has seen me out and about at times, is my hot product. Raise of hands, has anybody heard of this?
I heard of it.
All right, thank you, Mr. Davis. So our Homeownership Possibilities Program, very proud to say, with the support of many of our local partners, actually, this is all for you here, came into being, I want to say about 4 years ago, no more than 5. Originally, it was as a 95% financing of your primary home in the markets that we're in. Got feedback from our community partners. Prosperity, if you really want to continue to make an impact locally here, it's tough even for 5%, especially a first-time home buyer. What can you do about that? Well, we got 100%. So we'll finance 100% of the price of the home, primary residence, or the value, whichever is less. So there's no down payment required, but there's no private mortgage insurance. No private mortgage insurance, okay? There's 3 ways to be eligible for this program. When we started, there was just one. Now there's three. The applicant's income has to be under the median income level for the county and where the home is located. Not household income, applicant's income. So if it's two parties and only one's applying, we're only looking at that applicant's income. But at the same time, we're only considering their credit or income, right? So that's the flip to it. But there's many times that that one party can do it on their own, right? Where some of our peers, they're looking at household, right? And okay, now they got to consider that, so now they're not eligible for whatever program they have. Here, it's just based on the applicants. But let's say even that took them out of the water as far as opportunity because their income is too high. If the property is located in a low to moderate income census tract or a high minority census tract, and that's 50% or more minority, then the property makes them eligible regardless of them being over the median income. Okay? There is a website, ffiec.gov, ffiec.gov. Every partner I'm speaking with, I highlight that product for them. Help your client look at that property where it is.
Say it one more time, I'm so sorry.
Sure, FF like Frank, IEC like cat, .gov. You'd be surprised, or maybe not if you've been in Houston long like me, the property tract where it is. So many of our property tracts, high minority or low income census tract. Recently, one of our partners was looking at a transaction. Ellison Properties, Brent Parkway, not too far from 529. So just past Katy, if you will, or maybe some part of Katy. There was a properties there that were high minority census tract, I believe what it was. They were eligible for this product. But I'm going to go to my how. I have a HOP 1, and this is HOP 1. HOP 1 goes up to 250,000 loan amount. Not a price, but the 250 loan amount. It still wasn't penetrating enough locally. So what did we do? 18 months ago, roughly, we brought in HOP 2. HOP 2 goes above 250, no more than 548. The jumbo amount, it's up to the conforming amount. We do require their 3% down though, but no PMI. So that client or that friend, I would say friend that was looking at Nelson, they were looking for a 30-year fixed rate product, as little as they could put down, but no PMI. We matched it up, but they were above 250 and they knew HOP. So they didn't even think about that we can do anything there. And it was, I'm not gonna take credit because I'm a mind, it was luck, but it was the practice that I'm getting myself used to. Let me see where it's located on this website. So it qualified, it was eligible for our HOP 2. 3% down, no PMI. Give you some rates to look at. HOP 1 today, it's at 3.625 interest rate. And again, 30-year fixed. HOP 2 is at 3.375 fixed, 30 years.
How do those interest rates compare to just like your standard?
Good question, Mr. Davis. And this is where I'm going to have to defer more to my traditional mortgage area. It's competitive.
I'm sorry, now you're standing with PMI, right? That's the difference too, right?
There's no private mortgage insurance on either. On either one.
Okay.
Either one. So they're priced a little bit higher than if you compare your 30-year traditional fixed rate. But again, what's the difference here? No private mortgage insurance here. Okay. So it's a matter, again, back to your client, back with the assistance you give them.
Pretty high risk, right?
One more time.
Pretty high risk without it though, right? I mean, I'm not thinking out
For
loud.
us, for the bank, taking a higher risk with not having.
Yeah.
Yes, absolutely right.
Yeah.
Part of that, Mr. Davis's answer is, okay, the higher risk to the lender, right? And what cost, right? So we are still a for-profit institution, right?
Yeah.
So that's at the end part of that too.
So
But
this is an in-house product.
I
right?
was just gonna say, this is a portfolio product. It's in-house. It stays with the bank. Gives us that flexibility to introduce like this new program. Okay, so what we're trying to do is inform our partners. You have some options shared with us. Hopefully we have something for your client. We're trying to establish our tool belt as much as we can and with options for you, considering the times, considering our areas. That HOP 2 is my personal mission right now in the banks too. When I say me, but the bank, to really get that out there known. HOP 2 is very competitive. We just recently lowered that rate. Before it was priced the same as the HOP 1. We now are lower because they're putting more down into it. They're putting something into it. And here's the other thing. Back to educating our clients, right? Okay, it does not require you to put anything down on the HOP 1. 3% in the HOP 2. If someone can do more, we're not going to prevent them. If you can, great. Okay, but we're not requiring it. But absolutely, if you need to borrow, if you can borrow less, it's in your best interest based on what your plan and your situation is. We just are letting you know you have flexibility. You work the numbers how it needs to help you and your family.
What's the credit scores?
600 credit scores. Good question.
What?
That was the question of the day.
The whole training, that should have been the start.
600.
Wow.
Okay, but now here's part of the, I have to let you know so you can help your clients, right? Important. Really, it's the same. No past dues within the last 12 months. 12 months, okay? No bankruptcy the last 60 months. No derogatory housing payment, including rent, over the last 24 months. So similar to the doctor program, so we're trying to be consistent in those things, okay?
When you say past due amount, like 30-day late, right?
Excellent question. Past 30 days. It's on your credit report or is notated by that lessor that you paid past 30 days of the due date. Correct. Very important.
What about, since this is a portfolio product, what about like if we're looking at a married couple, the debts of the spouse, is that taken into consideration if they're not on the loan?
If they're not an applicant, we're not looking at that secondary party. It's just the applicant that's applying, their credit, their income only. Good question. Remember earlier we talked about those ratios, that front end number, that back end. On the HOP, we can go 45%. However, there's that minimum credit score of the 600, right? But we also recognize, well, there's plenty of applicants too that have been able to, from the beginning, take care of the credit. You know, life happens, so we get that. That's why we go as low as 600. But for those that good credit, as far as number, let me rephrase how I say good credit. Depending on the credit score, they may be eligible through some mitigating factors because of the scoring and history to go a little higher on that back end ratio. That was something that just was introduced within the last year to 2 years.
Higher rate or
Higher,
higher payment?
they get higher payment. They may qualify for higher payment. So that 45% may go up based on the higher the credit score they have. Here's the one thing that you'll see about Prosperity when it comes to credit score and how we're also different from our peers. We do not price our products based on credit. It's based on the product. So for the HOP, whether you're at the 600 or the highest credit you can have, everyone gets the same rate. Everyone gets the same. So that's one thing. If you send something to us, a portfolio, you won't have to worry about, well, depending on credit, let's see how your rate's going to be. No, as far as portfolio product.
Yeah.
Your secondary FHAs, that's as you know them today. Okay. But as far as our portfolio, that's one thing you can have peace of mind. Everyone's getting the same rate. If you're qualifying, you get it.
So Jose, quick recap. If the applicant makes under a certain amount of money, they could use the HOP program and buy anywhere.
Anywhere in our market current that we're in, Texas or Oklahoma.
Okay. If they make more than threshold, they can only purchase in a particular area.
Correct.
Using the HOP.
Correct.
Okay.
Correct.
What was the
If-
third one?
Those are the three. So income, minority census tract, or low to moderate income.
Well, the third element though is what she's talking about. The third element was where you could purchase above 250,000.
Well, let me clarify that whole part again. So the three ways to be eligible, I mean through the income or based on the property, two parts to that. If it's low income or high minority.
Oh,
So
okay,
those
so
are
high
three.
minority is the third one.
Correct. So essentially, either through the applicant's income or through the property, would they be eligible for this program? Okay. Now, this is the only program where the property can potentially help with the product as far as being eligible. Our other portfolio products, for example, you may, because this can also refinance. The HOP 1 and 2 can refinance, okay? We're talking to them, well, you know what? You've been in your house 15 years already. You've been on time and maybe you even paid some extra. We're looking at numbers. You heard of HOP because there's no PMI, but you know what? We've talked, we have a 10-year product. You look at the numbers, we'll show it to you. This looks to be a really good situation for you. Now you're done in 10 years. So it's not HOP. So we'll have that conversation with your client as well. So know that we're looking out. We don't make the decision for them, of course, right? But our job is to inform them of all the options available to them, including, most importantly, is something that's going to be in their best interest, right? Financial.
I'm misunderstanding when you said that low income and something.
High
High
minority.
minority
High
area.
minority.
Thank you. They had to purchase certain areas. Did I misunderstand that?
Yeah, so for our HOP, there's 3 ways to be eligible for that program. Either based on the applicant's income. Okay, so if you had an applicant in Harris County and they're making, I think the median income was like 79,000 roughly. All right, and your applicant's income was at 75,000. They're eligible if they're interested in our HOP program based on their income alone. So don't even have to worry about
Nothing else.
anything else on the property.
I did misunderstand you then, when you said that you had to buy within in certain areas.
To be eligible if they were above the median income. So same applicant.
So did I misunderstand you?
Well, that's what I'm trying to
Did I
clarify for you.
understand
One thing
I just
doesn't work.
needed it. Can y'all answer me that? Did I misunderstand him?
Well, it's, okay, so one thing, the first thing is the area medium of the area, right, of the income. If you have a client that's above that income, then they still have another chance to still use the program because they could locate a property in a low, medium area, right?
Mm-hmm.
If that doesn't happen, then they can find an area where it's high minority and still qualify. So those are the 3 times that they can qualify for the program. If that makes sense?
So it does have to be in a certain area.
No,
No, only if they don't meet
Okay.
the first one.
The income.
only if they make too much money. If they make too much money, then it can only be in a certain area.
Why does that sound like real when I'm not speaking out loud? Okay, never mind.
It's okay. It's
Oh,
okay.
really?
That's okay. That's okay. And we can further a little bit too if you like one-on-one. In the end, like I said, I go back to the Houston area, be surprised how many of our properties are going to be eligible. So again, my practice has been, I'm going to check. Okay, especially if they're telling me, they refer to us, say they heard about the HOP, would this work for it? Okay, where we can help together is if you did that with your client or prior to, it's going to save a lot of time for them. Because then they wouldn't have looked at that property thinking, because that's happened. That's happened. They thought it was going to be eligible because they knew they were making too much, but they thought that the property was going to qualify based on the location. No one checked up front
Mhm.
until they got to us. They weren't happy.
So give
So
me,
they're not
Jose, the
pushing
website.
anybody to a certain
Give me that
area.
website again
The
to
person
verify the
needs to choose
location.
their property.
Frank,
Whatever property address that
I-
they choose, you can go on this
EC.
website and see if it's
are
located
you able to put
in
this
any
on
one of
here?
the criteria. Does
Please.
that make sense?
So it's not about the area, it's about the property fitting the criteria? Is that
So what is it?
what's going on?
Based on location.
So it is location, the area, the same thing? Am I?
You can say it
misunderstanding
that
this?
way.
What is
You
it?
can say, so can I go back to your ffiec.gov? Yes. That same
I think
client.
I just need to think about it.
No, that's
I don't
okay.
wanna
That's
make-
okay. Take your time. Take your time. And I want to show, as Mr. Davis, if you could pull up the website for us.
Yeah, I'm gonna slide that over. Oh, it ain't doing it right.
And when you'll see the address, this site, you're going to go to geocoding mapping system. Right here. Uh-huh.
Hold on, let me share it so the people on Zoom can see.
Anybody have a client address? Any address? Residential. You want to?
Put my house.
5212
5212.
Arboles. ARBOLES.
Chris, search.
Search. Do Houston, Texas. Sometimes a little bit more specific helps.
The street drive circle.
All right. And if you hit search, Mr. Davis, depending on the year, 2021 not yet available, and this happens quite a bit still, right? We think by now it'd be updated. I'll hit search again. Okay. So you're gonna get the dot that tells you where this is, okay, on the map. The key for us is this chart. If we click on this demographic data, it gives us. So income, it tells us this property is located in upper level census tract. So that item, that's not gonna help us. But then we go to minority, 38%. We strike 2 on
It's gotta
that.
be above.
This has to be above 50%, 50% or above.
Okay.
All right.
So-
And this only would come in if the applicant's income was above the median income. Let's say this is Harris County. So if they're making 85, the applicant that's applying, they're too much above the median income level. Has
But
to
if
be
I make,
79.
if the applicant makes 60 grand right here, if he makes $60,000, then he can.
We're not
use
even
the-
looking at this.
Right, he can use the program. But you can go here to find out what the median income is though. Because that was my second
Yeah,
question. My
yeah.
second question was, how do I know what the median income
And
is?
actually,
for
we
the
go to
area?
HUD, based on HUD.
Oh,
So
so not this right?
No, because that number is not the number for HUD.
Oh.
You go to HUD, but we can do it real
So
quick.
where's HUD?
Yeah, go ahead.
What's the
If
website?
you just type HUD median income in
Oh,
Google
okay.
search,
Okay.
median,
Is it based on county?
yes.
Okay.
I'm gonna
okay.
pull up Harris County. And that's enough. You hit enter, because we're gonna go straight to their site.
Or to tell you right there?
No. Go back up forward, please.
Okay.
HUD, we need to put HUD up here. HUD area median.
All right. Right here?
And just hit enter.
All right.
And scroll down. I wanna see the HUD, where's my HUD? I think what's throwing this search off is taking off the Harris Inc. Let's take off, all of that. Harris County.
So tell
Yeah,
me
we want
Harris
the HUD
County,
side.
Harris County, just
Yeah.
put HUD area and median income?
Alright, go to the income limits. We get to this side, just scroll down. This is current for 2021.
Okay.
We're gonna click on click year FY 2021.
Mhm.
We'll select Texas. Mhm. And then we'll choose our county. For our purpose, let's use Harris County. You can. 79,200 is the exact, because we're going by this number.
Gotcha.
Applicant's gross income has to be under this number. Now, leads me to another point. We're all trying to work as fast as we can for our clients, right? I mentioned earlier, complete application. If you have someone that's trying to get pre-approved, which most of us will have that, right? They won't have a property identified yet, okay? In that example of an applicant, we cannot require them to provide any financial documents, including income like tax returns or pay stub. They can voluntarily give them to us though, okay? We encourage them to do that, but we cannot make them. I encourage you to explain to your clients why the importance. When you get a letter, you want to know that pre-approval letter is as strong as it's going to be.
Say that last part again, Jose.
When you get that letter.
No. You can't require them to do what?
We cannot require them to provide any financial documents if we don't have a complete application, meaning they've identified a property. There's no property address.
To offer a pre-approval letter.
No. Okay, I'm saying it. Pre-approvals, we can do on stated income.
Right.
Based on the application that they provided and their credit, right?
But you will not have reviewed. I'm speaking
Exactly.
from a standpoint of if I'm selling, like I got a house on the market for sale, right?
Yep.
If I receive an offer from somebody and they have a Prosperity Bank loan, and they got an approval letter from Prosperity Bank, it's a possibility that y'all have not reviewed the taxes, the bank statement.
There's a possibility, which is important.
Yeah.
Important to know, right?
Will it be written on the letter that y'all hadn't reviewed?
It'll say credit and income. I'm sorry, it'll say credit reviewed. It won't say the income on the pre-approval. It's a
We
very
call it a pre-approval or a qualification?
pre-approval.
And y'all call it a pre-
Now, what I can tell you though, that credit,
Noble, man.
yeah, that credit is something that's being reviewed very strongly though. Okay, so there should not be any surprise on credit. But the income is where, again, with a pre-approval, we encourage our clients,
Which I can't make.
but we can't make it.
Is that across the board or is that just prosperity?
I can only say prosperity. I don't know about the peers. I don't know about the
That's
peers.
what I was wondering too, I'm gonna be honest.
But it's important you should ask when you get those letters.
That's new. I didn't know that. Because at one
I
point
didn't-
it was required. Wasn't
Yeah,
it?
I'm
Well,
saying-
nowadays.
We've been in there long enough. We've been doing this long
Because
enough.
that's happening, well, it's been happening. Sometimes when you see the write-up, they said they want a pre-approval that has been verified for assets, the checks off. So if somebody does get that pre-approval, a seller, if those things are not checked off, then there's like, so they're asking for those check boxes.
There was a colleague that
Someone.
shared with us in today's market was so fast how these properties are going.
Mhm.
Again, back to that point, don't take any chance. Have a client, and again, the lender may not, cannot require you, but it's in your best interest to have them review it. So that's one less thing on that check mark that has to be worrying about because it's been addressed.
Due diligence.
And you all, I mean, you said you can only speak for prosperity, okay? Because I'm just thinking to myself, like, any financial institution that I deal with personally, even on down on my kids' tuition with the Catholic school, like, they want to see my tax returns. They asking me for.
Oh, they're gonna see it afterwards once they have a property. So what he's saying is upfront, like I have clients, you give them the application process, they fill it out, and then your lender may give them a pre-approval. Well, once they select a property, once they get the pre-approval, they're going shopping. Once they select a property and they submit that back to the bank, then the bank is saying, now submit your documents. But upfront, he's saying in order to get a pre-approval, they don't have to do that. It could just be based on their application.
Stated income. We haven't verified
Which is
anything.
great for you. I mean, which is great for you at the time.
Right.
Prior to, because
At
like.
the
And he's
At the
saying that
time,
to
but as
encourage
you're doing
them.
that, the next week, you need to have your
You
client put
need to
in
encourage them
documentation.
to put in their
Yeah,
documentation.
they need to be doing that within, the 5 days of them.
So
Yeah,
once they
because we
select
need
the
to know what we're
property,
doing.
you all
We're going, yeah, we're going, but you're gonna do your
Yeah.
Because we have a complete application.
Okay, okay. Once they select what they, okay, then you all gonna require, okay.
So what we're seeing with
And that's, okay.
many of
That
our
was my
partner
question.
applicants that they're referring is, they're ready from the beginning. I have my 2-month statement,
Well,
I
yeah,
have my
because
tax
anybody
return.
that has to
Right,
deal
right,
with
right,
any
for
type
sure.
of, that's all I was saying, I'm shocked. Because even on down on my kids' tuition, I have to submit, they want my tax return 2 years ago, it's crazy.
It
But
still
it's a
happens
good thing
though.
in this market that we get the pre-approval, because you could be on, I mean, you always already up against multiple bids.
Yep.
So you wanna go ahead and get that
Right.
contract and get that pre-approval, but 2 days later, I'm having my clients purchase
Yeah.
it.
Trying to find if we can go back to the FFIC. Any other address?
I just put in mine,
Let's see.
91%.
Yes, perfect. This one. So this property, if this
See, we in the
applicant,
hood.
for hot purposes,
I can't even read that
for
far.
hot purposes,
I can't either, I wanna see this.
All right.
Like it should be interesting.
they didn't qualify because they made too much money.
Mhm.
But the property is located in the high minority census tract, 91%. And it also is Lomont.
And minority means the minority
It's
of sellers, I mean,
91%.
buyers.
91%.
Not rate,
That's
right?
what you're saying, yeah,
The
that's
people
how
that live,
it's-
and you can break that down, Mr. Davis, if you
Uh-huh.
can see population.
Okay.
Right here.
It's not a race thing, right? It's about,
Well, it breaks it down for you. Minorities, ethnicities that are considered minorities.
oh, okay, I didn't think. okay.
Hispanic population and black population, the numbers.
We're probably, I'll give you an example, we're probably doing construction Sunnyside area.
Yeah.
Okay?
This is gonna have us
Well,
staring.
If you're familiar with Sunnyside right now, what's an average price that you would sell a traditional new construction home in Sunnyside right now?
220.
Okay,
50, baby.
maybe a little more.
Yeah.
So, you know my hop.
Very close to 3.
So someone for 300, well, yeah, they heard of HOP, 0%, oh, but they can only 250
So just to be clear, if somebody's making over 80 Gs, they're making too much. But you
for
know-
Harris County,
In that area.
Because it
where
could
the
be
house is
Fort Bend
located.
County has a different number, income
Could
limit.
be Galveston County has a
Galveston
different.
County has a different.
So if my
income
client came
limit.
to me and said they want to buy this house, that we just pulled up, and if they make 100,000.
Yeah, over 80 G,
They
that's what we had
cannot,
up there.
so that part is done, so
You gotta go to this
they cannot, they can't use that program based on
So
their
this is the number
income.
that. if
Because they
it's
make
counted,
too
this is
much
the number
money.
basically
Right,
they-
but I can look in there and say, oh, it's a minority area where the client is,
Right.
and so they can still.
So they can make $200,000 a year and still use the
So
HOP
they
program,
can make
100%
100,000
financing.
and still
to-
Just
buy
because
based on
it's a
the
minority
social
situation.
Yes.
They didn't qualify, but because of where it's located.
Correct.
Yes, because the area
And they
qualifies.
can use the
And
HOP
they
program.
need to be that minority, right?
No.
No, no, no,
That's what I was
They
trying
don't
to.
have to be
Oh,
African
no,
American.
no,
They don't
no,
have to
no.
be
I know,
African
listen,
American.
I know where you're going with it.
Oh,
I'm going the same way with it as
Well, I
well, but
wasn't
that's for
trying
a
to go there,
different,
I just
that's
want
for
to
a
have
different
an
conversation.
understanding.
Yeah.
I try to have
Oh.
an understanding
Yeah.
before I make an assumption, that's why I kept
No,
No,
asking.
you don't have to be
Because
a
I need to
minority, no.
understand.
Thank you for your question.
Yeah, I understand what you're saying.
Applicant,
No,
Oh, they're saying
to
the
clarify,
client
does
has
not
That's why I
have to
kept
be a
saying, like,
minority.
am I that's why I started
Yeah,
asking
but
y'all,
for
am I
the-
misunderstanding
Yeah,
him?
for what it's designed for.
A footnote that's surprising to that. Well, that's for a different conversation. So no, does not have to
Like
be.
Jose said, it's for a different
That's a different,
conversation.
yeah. I was gonna introduce some other data, but not for this.
The word is being thrown around a lot within different situations. That's why I'm like, okay, you say a minority, you saying minority can be used different ways. Every word got different meanings, so I just
And these.
I just want to have understanding.
Thank you for your question.
Non-white folks,
Non-white people.
non-white people. Anything else?
So-
You need today.
That's our presentation. I hope this part was useful.
Yeah, very
Yes,
good.
that
Absolutely.
was.
Please help us promote, if nothing else, this site, because look, as I mentioned to you earlier, we're one institution, we're here in Houston, we all want the best for our communities here in Houston. If we're not an option, that's okay for that client, but you'd be surprised how some of this data is gonna come up with some other options for some of our peers. And at the end of the day, think of us that, hey, Prosperity is one of the banks that told us they have options. We may not be the one for that client, that's okay. Think of us for the next time, okay?
Yeah,
But if nothing else, this is a really good site that I hope you share with your colleagues.
Yeah.
Yes,
Thank
ma'am.
you so
If
much.
I'm on site, on property, client's ready to do an application, we go online this Saturday, 12
Good
o'clock.
job. Good job. This is what Anna would say. Text her, or here's what I would want you to do. Email,
You have a card?
Do I have a-
Do you have her card and a
I
card?
would like you to please, if you have interest or further questions, reach out to her. That's a question I'd like her to answer for you. From my experience, she's readily available. However, okay, we all have families, right? There was a partner that said, what did she say? You can call me at midnight, but I'll respond to you at 8 o'clock on Monday, okay? Depends on your situation. She's always gonna do what she can if she's
Of
here,
course.
yeah? So just let her know what you expect, because that's the
I
fear.
definitely wouldn't expect that, I just would
But
want to
but
know. if it's
absolutely, but that's a
available,
question you want to know, because you will have that
Just because the
situation. right?
market is like this.
Exactly, exactly.
Yeah.
Which is why, if you have those clients early on telling you, I'm looking, where's your pre-approval? I know you're doing this.
Right.
Who are you talking to? And then.
You know, sometimes they like you to go out and date them for a few minutes. I take
We
them
understand, we're in the
to a
same
house.
situation
To a house.
too.
We dating looking at a house, okay?
We're in the same situation too.
Hey,
May I
Jess,
leave you all
Jess,
some of this? Some of the
Yes,
cards?
yes.
Perfect. I'll leave you the cards. I have them in Spanish too. Would that be
Oh,
needed?
yes.
Yes, okay. Spanish, and if you need more, let me know. You have Anna's card. I'll leave Mr. Davis a couple of my cards.
Thank you.
Absolutely. Thank you all for allowing us to be here, and my apologies on the tardiness.
And our fruit, man, you owe some fruit.
I owe y'all some fruit. Don't ask me about the fruit in my truck now, but that's okay. Well, and like I said, Anna wanted to be here. Who did she work with? She worked with somebody on a transaction not too long ago, but
Anybody work with Anna Alvarez?
somebody closed a deal
Hello.
a couple months ago with her.
They not here.
I got
Thank you
you.
so much.
Yes,
I appreciate
wrapping up
it.
right
Thank you for
now.
the great
Thank you,
information, man.
thank you,
I learned
thank
a lot
you.
today.
I appreciate it. Don't get, like I said, we got commercial options as well.
Okay. And so your role is you're the after the purchase.
Yes, exactly. If it's a portfolio project,
Okay.
I'll be, and
So
again,
you
in some
want just
cases.
continue to engage with the client, make sure
Absolutely.
everything.
And essentially, what I do is an introductory call. Sometimes I'm in the middle because I'm a contact for them.
Yeah.
But my goal now is you're getting a call within that first 2 weeks, and when you close, at least with me, Any questions? Because that closing time was a blur for you, I'm sure. I'm gonna remind you of two things, if it's a home purchase. Don't forget your homestead exemption.
Yeah.
Don't forget the homestead
Yeah,
exemption.
yeah, yeah.
And let me remind you about how escrow works. You'll get that letter. New construction, don't forget, let's look at that tax value, what happened when you bought it.
Yeah.
Let's make sure what it was, because you don't want that surprise, oh, why did it go so much?
My
Well, when
mortgage
you
just
bought it.
jumped. Yeah, my mortgage just jumped. Yeah, no, that's great. I mean, that's, that's a new, that's something new that concept of bank having that after sale.
It's still, again, we're a community bank inside, and that's what makes us different. You know, most of our, in my group at least, average tenure of the officers in the bank, in that banking center, 10 years on average.
Yeah.
So they stay with us a while.
Man,
Bow
appreciate
tie,
that.
I gotta give me a bow tie. I saw you coming in, like, give me a bow tie.
That's Mr. Miller. Fill in the application right now.
Oh, you seen it?
I'll send you.
Oh, okay.
So question, I have a client that has land
Mhm.
and they want to do tiny homes or small homes
Oh,
on there.
okay.
And if they, can they get financed as a group? If they want to do
All
like
right,
four?
everybody that's on
Oh,
Zoom,
good
this is
question. Okay.
the training for the day.
Like, so
So
we don't want
y'all
to,
have a great day.
We're
We're gonna start grubbing.
One finance.
You know, you can only eat if you're here.
Kind of like construction,
Y'all
but
have a
they're
good
already
day.
built, so, but you gotta still do the land part and stuff.
Okay.
Is that a
You're gonna eat if you're here.
possibility?
What are